We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back, everyone. Look at that. We're having all this content come out. So different. We've been on quite the hiatus since I've gotten so busy. But yeah, I like this new cadence. I think that we can get something out almost every day. So I think if you haven't seen, I published 2 videos, one with Andrew, who's actually in the chat, and of which we're going to be doing an ICOM after this. I think Andrew was asking about that. I saw you in the chat. You were saying ICOM. No, there is ICOM tonight, but after. Okay, so, okay, boss, what is this experience stuff? What do you mean? Where's the experience? How does it post guess? All right, anyways. So if you guys haven't seen the video talking about Dave, a stock that Andrew is very excited about, it's the latest video that we published here on Capital Mindset, as well as I published my public thoughts on Alphabet stock and went over the valuation and the like. So today we have the topics as always in the title. And if you look in the description below, you'll see the timestamps that will kind of guide us through. And we've just entered the first topic at the 5-minute mark, being the newest ETF called the Grift ETF, or Government Grift. So Total Capital Government Grift ETF. What does it do? Let's add this to the stage and share the screen here. So let me remove this comment real quick. Dave, my debt slave. Yes. Oh, by the way, I will, beginning tonight, to quote, The Dark Knight. I will be leaving on occasion, like a little bit of an Easter egg in the thumbnail. You may or may not see the Dave Bear logo. It's a way for me to have extra fun with you guys. It's a leaderboard. Wait. There's a leaderboard now on YouTube. No way. I'm going to YouTube. Let me see real quick. Okay, number 3. Oh, okay. There's literally a leaderboard now. All right, cool. Anyways, coming back to this. So the Grift ETF. So what effectively it attempts to do is to generate return that mimics what politicians are investing in. So I think we all know about, Pelosi tracker, Marjorie Taylor Greene tracker, all of that stuff. There's a service called, and I'm not condoning it or anything like that. Hold on, what is this? Autopilot. Okay, so not sponsor or anything by them, but they're one service that I know of that's an app that you can use to actually invest. I don't have any money invested in that, just to be clear. But this is the first public option by which you can invest in an ETF wrapper and get similar exposure. So the concept has been really attractive. I can understand why this team wanted to release this product. There's been a lot of traction on social media about this, of course. Again, Pelosi tracker, Marjorie Taylor Greene tracker, yada, 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 all the trackers that exist out there, focusing on buying or what politicians are buying and selling. So I'm not entirely sold on the product per se, but I understand the excitement for the product. And some might actually consider it like a fun speculation to see, hey, whatever the politicians are buying, here you go, I'll park it in here. So what are the fees here associated with this fund? It says right down at the bottom. Management fee is going to be about 0.75%. I'm actually surprised there's no promotional offer. A lot of times when you see a new ETF come out, not all the time, but many of the times you'll see some sort of promotional offer that makes it a bit of a sweeter deal. Sometimes it's like a 0.5% discount. Other times it's a little bit more. But 0.75 puts it on the higher side of things, but in line with other actively managed ETFs. So it's nothing too crazy. I know the joke coming, right? It's like, oh, the Grift ETF is the Grift. It's like, okay, yeah. To just get that joke out there in some ways. Okay. And then you can read additional, and I'm giving all credit to the person who posted this on Twitter, so we're just going off of them. And I also wanted to showcase this hilarious AI image of Chamath Palihapitiya, which, by the way, are we so back, guys? Because we have SPACs coming back. We have what what else are we missing from 2021? I think we're pretty back, or at least we're getting there. Some might even say clown market, but let's say what are we talking about right now? We're talking about the Grift ETF. It's the new latest and greatest product. Okay, so there used to be a service called Iris that hooked into Schwab and Hood and would make real-time trades in your account based on what people you follow traded. I think Autopilot used to be Iris. That sounds about right, because that's kind of what Autopilot does. So with that being said, I'm not entirely sure what Autopilot charges. I could probably look up the fees and stuff, but maybe it's let me see. Autopilot charge. Okay, let's see. $100 annually or $30 per quarter for its plus option. That's honestly pretty affordable for someone who wants to just like throw money at something like that. Yeah, that's not bad. Okay, what stocks are coming back? I see. Pretty much a lot of the retail names are back. Let's see. By the way, if you guys ask any questions, I'm going to star them. But just keep in mind, I can't stay on for that late because I have an ICOM with Andrew after this. ICOM is what we call our Capital Mindset private streams. Stands for Investment Committee, if you're curious. Because I get that question all the time. What does ICOM stand for? All right, do you just buy a stock just because the IV is high? Would you buy a stock just because the IV is high? No, not just because the IV is high. I don't know if that question was for me. Have you discussed the switch from Misty to Alti? Wait. Citizen of the Year, you have to update me. I've been so out of this. I've been so out of this. There's been some switch to Alti. That's crazy. Venom or Crocs? Totally different. So Venom, the royalty company, and then Crocs, the shoe company. How? So with Crocs, obviously you have the perpetual discount. Is it a fad? Is it not a fad? I guess there's not much else to talk about this. So we'll kind of have this like segue before we get to the China deal. But let's go ahead and talk Crocs and Venom. So with Crocs stock, and let me share this tab. With Crocs stock, which is actually getting a bid after hours, partially because of the Nike earnings release. Nike earnings release, honestly, what on the surface, on a current quarter basis, there's not much to be excited about, but it's always about the guidance. So what do they discuss on the guidance? And in particular, I think it was what they had to say when I glanced at it about how they're handling tariffs. If we recall, for example, all the things what live stream was it? Let me actually go ahead and find the live stream where I discussed with you guys like some of the nuances behind tariffs and why you can't just say, oh, tariffs just kill everyone and companies can't adapt to it, etc. So it was consumers dying. What date was this one on? April 10th. There's one where I went and discussed quite a bit on Russia. I believe it is this one. So tariff dip to massive boom. And let me make sure it's that one. Or is it consumers dying? When was this one published? April 30th. Actually, no, I think it's this one. Yeah, it's this one. Okay, I'm going to share my screen in a second. I'm just going to make sure that it is this one. Yeah, it's this one. All right, so you can watch this live stream if you want to hear like the whole spiel. But in short, what we discussed, and I'll kind of reiterate some of the points. So like a company like Nike, it operates under a very elastic form of a product distribution. So like, for example, Elf, they're going to be a lot more sensitive to price changes, or their consumers going to be a lot more sensitive to price changes. So they have the highest motivation to switch supplies. And at the end of the day, what their products are is just an assembly of chemicals that makes up the makeup. So there are plenty of producers worldwide that could do it. And they have actually switched a lot of their supply chains around, and they're able to even switch even more. And so when the Elf management team was asked, like, hey, what are you going to do about these tariffs? It's like, well, the same thing we did before, no different. So with Nike, which arguably has a more proven management team, Elf has a very proven management team, but Nike more so. They had a lot of their supply chains that were, sent to the United States, or not sent to the United States, but product from their supply chain was sent to the United States. Over since like 2018, the shift was, I think, like a majority from China, and then it became about 15% of the product was sourced from China, and all of that was for domestic consumption in China, and then most of it was in Vietnam. And so they did that over a short time frame. There's really, at the end of the day, nothing to say that further progress can't be made with a company like Nike, which has deep pockets. So yeah. What's the ticker for the Grift ETF? I believe it actually is going to be Grift. Yeah, ticker GRFT. So let me come back here. Yeah, Grift. You can see it right there. You see it? Grift. So that's gonna be the ticker. Yeah, so interesting when this finally comes out. And it'll be funny to see its performance. Maybe throw in like a joke amount of money, buy like one share of the ETF, and see what happens. Good thing Fabio finally updated his thumbnail pic. Very nice. Thank you. It's about time. I probably have to do an even more, more updated one, or something a little different than just me in a suit. Because I like to wear, casual things on stream too. Like I have just a shirt on. So apologies. I have to drink water because I'm extremely thirsty today. I'm so thirsty for making so much money, which we'll talk about. All right. So let me make sure how we are on time in our schedule. Okay, so I can still answer more questions because we're still ahead of schedule onto the China discussion. So Alti is an ETF that looks at 15 companies, the highest IV. Oh yeah, I know the concept of Alti, but have they switched it? Oh, high yield dividend warriors have flocked to. Oh no, why would they get out of Misty? Didn't Misty do really well? Where's shirtless Fabio? I don't know if you guys want shirtless Fabio. I feel like that's not the vibe here. I feel like maybe I'll do a shirtless video or shirtless live stream if I'm pitching Grinder or something like that. It would be very on theme. Just be like, hey guys, I got a stock pitch for you. It really grinds my gears. All right, Mets versus Braves. Who you got? I'll go Mets because I think you're Braves. So not gonna lie, this is one of the best weeks in the port I've ever had. Nope, absolutely. I mean, everyone in Capital my side, I think we've been just going absolutely, I don't know, bonkers. Especially, well, we'll talk about it because I wanted to spend a whole section on just that. But it's something else when you're long a stock, no one talks about it, and then suddenly it just gets picked up by retail streamers, and then it's like that bell curve meme, the middle guy going like, no, it's too expensive, blah, blah, blah. And then like the guy with the hood is like, the retards are coming, and then on the other side of the curve, it's like the left side of the bell curve, and they're like, we are coming. And that's literally how it feels. So I want to see. Oh my gosh. Okay. I can't read that out loud. Mets is correct. Okay. It's the correct answer. I passed. But yeah, no, I want to know how you guys are doing. Actually, let's go ahead and put up a poll, see how everyone's doing. So remember from the last live streams where we were talking about not being hyper pessimistic. So I want to see oh, okay. Someone's trying to get me into the political discussion. Oh, Social Smear in NYC. Any good shorts or longs if this happens? Okay, so the question. This is a great question, actually. Can the person do exactly what they say they want to do? That's the question. Because if they cannot, then okay, there's going to be like sentiment and it's going to be a buying opportunity. If they are able to actually affect change, and so how Dan was explaining to me is, there could be some push, or there has to be some push out from a lot of the borough leaders, but that's kind of a long shot. Then maybe you short any New York City centric real estate, particularly. Again, this is like if they're able to implement the things they want. And then if you're going long, it'd be something maybe real estate centric in I don't know, Florida. But do I think they're going to be able to do it right now as it stands? I don't think so. So if anything, it would be a buying opportunity. My instinct would say buying opportunity on things in New York City, and then just betting on, this is like a little phase for New York City, and they'll kind of grow out of it, because arguably, and I'm not trying to make this political, but Andrew Cuomo was a piece of shit. You like that? A little switcheroo. But anyways, no. We're being serious. I'm saying that because that's what New Yorkers told me before coming on here. They're like, "Oh, Andrew Cuomo's the biggest piece of shit." So I'm just repeating that. But I don't particularly find that they're going to be able to pass any of the things that they say they're going to pass. So I kind of think of it this way: I'm going to remain structurally optimistic, or not structurally optimistic, but cautiously optimistic on New York City based assets, and kind of think it's kind of a nothing burger. If there's some sort of like crazy panic, I'll look at the bundle of assets that are in my circle of competence, like some of the REITs that might be in there, office centric REITs. But do I have a desire really to buy them? Other than that, no. And probably I won't buy them because there's plenty of opportunities still elsewhere. I don't really find the office space in New York City all that attractive as an investment at the present time. So, but I'm trying to answer your question, Hal. I just I kind of come at it with like just it being a nothing burger. Okay, so some good questions about Andrew Cuomo, elderly threat, or threat to the elderly. I think we can just skip over to the China deal. But with the China deal, I mean, there's nothing too much to be said about it. Some news broke out pretty early on Bloomberg, or Bloomberg terminals. They were spreading it out, and there was discussion from, I think it was Lutnick, who said, "Oh yeah, the deal was basically done two days ago or so," and to an extent, like the market reaction was, overall, I think underwhelming, but at the same time, we've also had pretty extended rally since the bottom. So a lot of that optimism might be starting to be priced in. There's still a lot of reasons to remain optimistic on the general trend within the market, but I can't help but be cautious on some of the behaviors we're starting to see especially from the retail crowd. And again, we'll get to that when we talk about TSSI and what's happened there. for a good thing, right? But for at least capital mindset, we're probably looking for the door and looking to sell here and there, or if sell fully to that retail crowd, and letting them have fun with it the rest of the way. It feels similar to how 2021 felt. It's not the exact same, but it's starting to rhyme with it for sure. But there's still plenty of opportunities elsewhere, which is the good thing. So just because this opportunity might be just like exhausting itself, we can take the capital and deploy it into the other ideas, which is awesome when you have let's say a really broad universe of stocks, and with different ideas coming around you. So New York will annex the surrounding states, then put boots on the ground, taking states on a march towards California. Oh yeah, that's a movie, Civil War movie. Agree, Fabio. Nothing burger likely fears, usually buying opportunity. Yes. Although, the thing is, it would have to get really beaten up for me to kind of go, oh, yeah, these other buying opportunities, I'll put them to the side, and I'm going to look at stuff that's like New York centric. Because I highly doubt you're going to get like banks selling off or financials broadly selling off because the New York City mayor, right? It's probably going to be something like, New York real estate, REITs fall off or something like that. Nothing that Amazon cares about. Now, okay, back to the China deal though. I want to actually put a pin in what I said, because we really don't know until the market opens tomorrow. Because last I checked, futures are flat. I think futures are not reacting too much to the whole China news thing. So it makes me believe, at least for the time being, the market was kind of sort of expecting this as a done deal. And it was maybe perhaps to the negative side if there wasn't a deal struck. Also, we came out with, or not we came out, but we saw commentary come out from the European Union. The European Union officials come out and said they're ready to make a deal. Of course, this is just verbiage, right? It's just words. We don't have a deal in front of us yet. But I think that it's kind of safe to say, or it's safer to say, that the market is expecting these deals. And so you don't really have that move up that we did before, when you have, for example, the pause on tariffs, and then discussions about deals kind of having that massive move in the market. Now you're having, discussions about deals, and the market's kind of taking it on as like, okay, but we expected this. Okay, but that was expected. Okay, but that was expected as well. That's sort of like the feeling that we might be seeing here. We'll see what happens in the morning, because you can't really tell. There have been individual names that seem to have some pickup in the after hours. But if you're retail, a lot of that is more than likely the pickup from Nike. So, for example, Crocs here was up 2% after hours, off of probably low volume, by the way. If I can check the volume here. So it's probably not much volume. 1.2K, but no, yeah, it's generally low volume. So that's just kind of like an effect from Nike, because even Deckers was up about 2%. So a lot of the apparel stocks were up. And you would think, right, apparel like VF Corp, Deckers, etc., all of them would be very optimistic or very jumpy if there's some sort of trade deal, because the implication is some normalcy to the whole tariff situation, and we would have clarity on maybe a trade deal coming with Vietnam, which affects more Deckers. Well, Crocs actually, by the way, has a lot of exposure to China via Hey Dude. Okay, we can talk. All right, I'm starting all the comments or the questions, by the way. And I might shorten the discussion on China real quick. So let's see, I have until minute 35. I'm going to shorten it, and we're going to talk about TSSI. Well, I'm getting added. I'm making sure that Andrew is messaging me or something. No, he's messaging someone else. All right. Let me go ahead and close this poll. So 75% of you said yes, you ended up buying the dip. And I should ask a follow-up question. It's like, how do you feel about it now? Are you pessimistic, optimistic, neutral? Okay, so I'm not sure how much of a buying opportunity, to be honest. Like, won't get beat up enough, and the fact that NYC could bleed wealthy population is enough concern to watch from the sidelines. Yeah, like I said, it's a beauty contest. All assets are competing with each other on a case-by-case basis. And so you might be finding other opportunities elsewhere. So for example, there's plenty of small fintechs that I think are still presenting a very interesting opportunity. Small niche banks. I think that certain insurance companies still present an interesting, so again, still in like the financials. And in particular, there's some, there's actually one technology company that I'll probably make a video about in the future. And its competitor is very popular. Alaka knows which one I'm talking about, but its competitor is extremely popular and talked about by retail. But the main company, right, the one that we're invested in, is not talked about at all, like nearly at all. And it's the clear leader. It's crazy. So I can't understand it. What happened to NVO? All right, we'll talk about NVO. I'll kind of mix in some questions here while we wait for the timer. But yeah, the long story short on the whole China thing is it's not much of a breaking news as of yet. It's not really having that much of an effect on the market as well. I think the market expects a bit more. Now we have, well, we'll get to that in a second. So NVO. So what's happening with NVO? There's a couple of things that are causing some, let's call it, sentiment headwinds. So recently, of course, and they made breaking news by basically calling Hims a fraud. They accused Hims of essentially misleading patients, sort of committing crimes, kind of, in a way. And there's this wall of worry about Hims, whether or not there's going to be this like wave of lawsuits. But the Novo also, according to some clinical data, is setting behind its competitor Eli Lilly in a few key areas, particularly the effectiveness of their drugs. Now, one key differentiator between Novo and Eli Lilly seems to be the side effects, the breadth of the side effects, the severity of these side effects that each of their competing drugs offer to the patient. So Novo's drugs tend to have less, from what I saw, and Eli's tend to have a bit more. But that being said, it does also appear from what others have commented on both drugs that Eli Lilly's, as far as like the target effect goes, has had greater success. So there's questions about Novo Nordisk's long-term competitiveness in the market and what patients and their physicians are going to recommend. Now, the second gen drugs are, for both of them, are looking promising, at least from the consumer standpoint. Eli Lilly also had some data come out that showed their drug has some interesting effects where it allows for some fat loss and also mitigates the amount of muscle loss as well, which is driving a lot of upward sentiment in Eli Lilly, and conversely, it's having negative sentimental effects on Novo Nordisk, because the implication there is Novo Nordisk is going to lose market share, or the growth rate that they're experiencing is going to be hampered, which at the end of the day, when we're looking at all stocks, the valuation at present, we have to make a judgment call on the relative relationship that has to the growth rate. So just because Novo is trading at an elevated multiple to Pfizer doesn't mean Pfizer's cheap, and doesn't mean Novo's expensive. It's going to be, of course, relative to what that growth rate is going to be. And us as an investor, we have to think about what the accuracy of that E is going to be and make a judgment call based off of that, and then let everything else fall in place. So yeah, with Novo, kind of circling back to it here, at $67, we're trading at mid-teens multiple based off of trailing, or I think that's actually sell side's forward estimates. Now, are those estimates correct is the question. Their momentum right now and growth on their current pipeline, or not their current pipeline, their current franchise for weight loss seems really promising. And then just off of that, you get to that meme that I shared, where you have the bell curve meme, the left side just saying, hey, this is still growing, or no, fat people want skinny. The right side saying, hey, this is still growing. And then the middle is talking about all the competitiveness out there that's hurting growth. Now, who's gonna be right in that? Is it going to be middle bell curve, or is it going to be the two ends of the bell curve in that meme? Yet to be seen. But I think that when you kind of look away from the data for a second and give them credit for at least the mind share of their franchise, that's definitely has some value. And so when people think of the weight loss drugs, they think the word Ozempic, which is a Novo Nordisk franchise. Now, again, what will patients prioritize, or what will physicians prioritize? Will they prioritize Eli Lilly's, or will they prioritize Novo's offering? Yet to be seen. Other people are making their bets in the community. People who know more than me about pharma, but yeah, we'll see. Why is the market not reacting to this China deal? Okay, yeah. So it's what we discussed earlier. It's maybe it was priced in argument. It could be priced in. It could be that the market, like I was having this conversation earlier, is just expecting a bit more right now. It was already expecting that there was going to be discussion with China. And in fact, it would have been a reaction if there wasn't one, but not a reaction if there was one, because the market has, in some ways recovered up nicely. But we won't really know until tomorrow. So we're kind of just talking ahead of ourselves here. Okay. There's a question I got. Oh, by the way, bought the dip. I'm still parity with the market, partly because of quantum. I took this to the side here, but you guys won't believe this. So there's a tab here, and this kind of sickens me a little bit. Makes me vomit on the inside. Look at all this here. So on YouTube, right? I never really play around with this. I just make the content I want. But I just clicked this today for whatever reason, and I'm not kidding. Look, read all that. Or fine, I'll read it, because some of you are audio only. I know that some of you like to, run with me streaming or doing whatever, doing laundry. So I'll read this out loud. So I just clicked on what YouTube basically offers me as recommendations on content to make. And it's basing this off of the algorithm based off of what people in my genre want to watch, right? So it's recommending me as a creator. It's like, make content about quantum. So the first one is make content about the quantum computing stock market, a deep dive. The second one, quantum computing stocks, hype versus reality. So we're at 2 out of 5. Quantum computing stocks, red flags and opportunities, 3 out of 5. Then it keeps going. Investing in quantum computing race, 4 out of 5 recommendations. The fifth one, the future of investing, quantum versus traditional. Okay, so we are 5 for 5 of the recommendations. And by the way, all I did was click the inspiration. This is like pre-filled. All this is pre-filled. This is all I did. All right. And apparently, maybe I should be sad with you guys, all of you watching, because this is telling me very popular topic with your viewers. You have a lot of explaining to do. Very popular topic with your viewers. 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 This is you guys. You guys did this to me. So Google AI knows all. So I can see what you guys are watching now, basically, by clicking this. And yeah, it kind of sickens me a little bit to know that. But yeah, you guys are cherry tigers in shambles. All right, retail investing in quantum is like drunk looking for his keys. Yeah, that's good. Yeah. Okay. So where are we at on the topic time? I think we're right on to the next one. And that is TSSI. All right. So let's talk TSSI. So thank you to all the retail investors that helped me out along this journey. Well, helped all of us out. So Capital Mindset in the comments, this is your time. So TSSI, what can we really say about TSSI? I did talk about this publicly, by the way. There was one live stream where I did talk about this publicly, but otherwise it was discussed only extensively inside the Capital Mindset Club. So the long or the short story to the pitch is this is the best way in like one sentence. Think of SMCI, but much smaller and hyper concentrated to a single customer. So the story goes from all the way to the beginning. Way back when, the director for sales at Dell left his job, goes to TSS Inc., and gets involved with the company there. He brings those connections to TSS, and then they land this wonderful, lucrative Dell contract. That starts the whole story. Of course, this is the very beginning of the AI craze. We have all this appetite for building data centers, et cetera, et cetera, et cetera. Now, long story short, it was Andrew, the analyst on Capital Mindset. He brings up the pitch already. While it had already had stellar performance, it had not yet uplisted to the NASDAQ. And so some of us got involved before the uplisting, and then some of us got involved after the uplisting, once you got a bunch more liquidity. And then the stock proceeded to just go bananas. I think just right after the uplisting, it went from roughly $8 a share all the way. That was this rally, back literally, I think it was like back over here, all the way to $14. And then there was this big sell-off opportunity, right? But at the end of the day, when we were doing all of the let's say legwork on the stock, there was a lot of highlighting the discussions around the new facilities that there was going to expand capacity. Their location is also being ideal for a lot of data center expansion, them being in Texas and a lot of data centers being in Texas. So there was a lot clicking all at once. And then looking at some of the concerns, which was at the time, Jesse, the other analyst in Capital Mindset, who actually has a lot of expertise in this space, was discussing or pointing out that really the only risk at the time that he could think of was they're not the highest quality producer, and then you're just getting a lot of excess capacity. Now, one key contract that they won back I think it was last year, is they got a agreement with Dell, and I think that was the Q4 earnings. They discussed the renewed agreement with Dell that I believe lasts 3 years, and it came with some minimums. Now, at that point, there was sort of this, let's say, bit of a retail hype, you could say. And I was talking with the members, that a lot of the participation in the stock at that time, especially after the uplisting, was pretty much all retail. So the volatility was there, that any little thing, any little movement, misunderstanding of earnings causes this massive, insane volatility. So even if the forward expected earnings or the management is discussing, their future expanded capacity and the new deals they're likely to get, the retail investor could maybe look at, I don't know, like a declining in sales in one segment, and then the stock would sell off. And that coupled with, the broader stock market sell off caused us to have probably hindsight's 2020, but one last good entry into TSS. And at the time, we had no idea that there was going to be this meme-ish excitement. So it's good to be on the other side, right, where you're buying well before your legitimate investment becomes some sort of meme or not cult stock, but meme stock almost. And then you get meme-like returns right after. And then very quickly, within the span, just a couple, well, actually, it happened within the span of a month, it feels like. They report earnings. Turns out everything that was discussed as far as expansion of capacity was somehow not priced in. And before you know it, it's up 70% in a day. 70% a day. And then the momentum sort of continues. You did get this little bit of a pullback. Unfortunately, I'm not going to name names, but you know who you are in the chat. You sold one person. I'm just kidding. I'm not going to. But very quickly, it started to get picked up by different circles. And then before you know it, we get to where we are today, that we find out this morning a retail streamer is talking about the stock, and the streamer has a lot of followers. And so by the time his audience is learning about the stock, and other people on Twitter are talking about the stock, it's already $31. And I mean, I think when we did the evaluation, I'll credit this to Jesse and Andrew. I think they said $30 was wow, very optimistic price point by this time at the present moment with the potential earnings that we think they could achieve. Which I think on the high point we had it at $1 in EPS. Now, if they can hit $2 in EPS, this will once again look pretty cheap. But at $1 in EPS, I mean, we're still sitting at 30 times forward earnings. But that's, again, more the optimistic scenario. So there's still, depending on the overall legs, right? The legs that we see from AI investment, it could be a stock that continues to perform really well, for all we know. Now, I would probably expect some volatility going forward. I'll go ahead and disclose publicly what I've done. So at this point in time, I've sold the vast majority of my position as of today. I already discussed with the members, so you guys already know, but I've sold the vast majority of my position. I believe Andrew is fully out of his position, and I think Jesse has also sold the majority of his position, but is keeping some of it. So I'm basically in it for the rest of the ride. Whatever happens, happens. I've sold my basis several times over, profit several times over. So right now I'm just sitting at, granted a small fraction of what it once was, but at the same time, the size had gotten a bit carried away. So yeah, it's just kind of pointing out that, hey, thank you retail investors out there, thank you, keep it up. And let's see if we can get it to 60. Who knows? But at this point, if it crashes and burns, it's not going to impact the portfolio. And then if it, I don't know, doubles again, hey, it'll be maybe like two cars, right, that we can buy. Andrew, I'll go ahead and share because you deserve to also come on here and pat your back, and maybe you're going to do a cautionary tale to people. So Andrew's going to come on here and he wants to spread the word. I bet you he's going to be a cult leader of Dave. He's going to be like, but there's this other stock that's like really good. At the moment he does that, audience, I will mute him. There's no spreading cult-like beliefs. I'm just kidding, Andrew. You can talk about Dave if you want. I'm going to try to dump it, FUD it up. You can do whatever you want. Because at this point, I don't really care. Yeah. So that's pretty much the end all be all discussion. There was a write up, lots of videos we did for Capital Mindset community on this stock, and so it was fascinating just to just watch the hype come in, and we were like, wow, we were just. All right, give me 5 minutes and I will be on. All right, so we'll kind of I'll answer any questions anyone might have on this or any other topic. But yeah, from misery of low income households. Get Dave back to 190. I mean, yeah. Get Dave back to 190, please. Thoughts on ASML? Great company, but the I would prefer TSM. I'm long TSM. I think that TSM's occupation within the value chain is much more powerful, believe it or not, than ASML. I'll explain why. So yes, ASML is a monopoly, but at the same time, TSM has a lot of power with ASML in the form of negotiation for their lithography machines because they're such a massive buyer. And then the unit economics benefits TSM, I think, way more because they're going to be more of just how much volume can they churn out, and the volume is much more elastic versus ASML is selling the machines per se. And then what you have as far as a benefit goes is yes, the volume of sales per machine, but also the pricing of each machine. While I think TSM has shown that again, that volume is much more elastic. Of course, you could argue elastic, yes, and that also implies it could also contract. Absolutely, you're right. But I think in what you're seeing in this moment in time where we are in the cycle of investing, TSM has the better earnings power, earnings potential than ASML. And I'm not saying anything profound. That's obvious. You can't argue against that. There's no way to argue against that. And then arguably, if the other two competitors were anywhere near as competent as TSM, then we'd be having a different discussion. It would be much more of ASML is by far away the better, way to play this. And TSM is going to be the inferior investment. But that's not the case. That's not the world we live in. TSM is the near monopoly in terms of fab, because the other guys, their yields are so much lower. I was discussing this with the members today, where in fabrication, if your yields are significantly lower, so in the case of, I'm making up a number, this is just for an example, but they're not too far off. So TSM's is in the 90s. So let's say TSM's yield is in the 90 percentages. Let's say it's 98 to be extreme. And then let's take Samsung. Samsung's in the 50s as an example. Then let's say even if Samsung charges you way less per batch, it's going to cost you, it potentially could cost you more to use Samsung than TSM, because TSM's yields are significantly higher. So the yield is sort of like the measure of like the usable product per se. So if your yields are higher, right, then when I pay you for that batch, I can use more of the batch. So I'm going to make the numbers easier for this example. Let's say it's 50 and 100%. So let's say it's perfect yields and 50% yields. Then the one that's offering you 100% yield could, to keep the example simple, charge you twice as much and be about the same price, effective price, than the guy charging you 50% off or half off for 50% yield, because you're only getting half of the silicon actually be useful for your for whatever it is you're going to use it for. So TSM has that massive advantage right now that their yields by far and away are ahead of the competition, and that gives them that pricing power. So we talked about this before, how TSM, it's like if Intel or if Samsung get any business, it's because TSM can't really satisfy all the business and demand that's out there. So all that they build, all the new capacity that they expand, then that's all going to get filled up. So they're really the bottleneck. I was telling this to one of the members today. They are the bottleneck here in all of the DC CapEx. It's not Dell. It's not anyone else. It's not TSSI. It's not NVIDIA. NVIDIA has the design. It's who's making the actual silicon. It's not ASML. Now, ASML is a potential bottleneck because, yes, they have such a strong control over the lithography. They are the current monopoly for lithography machines. So, like, hypothetically, if there was this CapEx cycle, which you can see, by the way, do not necessarily coincide with the actual chip CapEx cycle. They have two separate CapEx cycles. So TSM has a different CapEx cycle that's moving alongside the x-axis that's has different peaks and troughs versus the CapEx cycle of data centers. You see that in the earnings of ASML and TSM. They're different. Right now, again, that elasticity of volume, that rapid slope upwards of volume, is being showcased in the demand for the silicon, but not as much demand in the demand for the actual machines. Not only ASML, but you see that in Applied Materials, Lam Research, and the like. So yes, they're good companies, but for the moment in time that we were in, you would have had a better return investing in TSM. And I'm not just saying that to, say like, oh, hindsight. That's also what I did. Big firing on my PC. So, yeah. Defense stocks light. See, okay, but defense spending per se is going up. So there was one budget for the US. I'm trying to think of it. It's like the overseas special something budget during the Iraq and Afghan war that boosted the steady state military spend. Like that went away when we ended the wars, but military spend as a whole is going up. You don't need people to use the equipment necessarily for you to make more money. You just need the procurement sales to go up, or the procurement budgets to go up. So higher procurement budget, or various other contracts, but higher spending in general, just keep it simple, equals more money. You don't need the war per se. So just because countries want to prepare or have the bigger stick, you win. But you're asking, so defense stocks, I mean, yeah, defense stocks go through their cycle of hated and loved. At the beginning of this year, there was a good opportunity to pick up a few of them. Leidos actually didn't perform as well, but Huntington Ingalls, which I know Bacon and Dan picked up on a good bit. Northrop Grumman, Lockheed Martin, L3 Harris. And then in Europe, you had quite a few that did very well that I did not participate in, by the way, but I'm just shouting them out. Do you still hold all of that? Yes, Garbage Goober. When are we talking about Dave? Well, I have to wait for the Dave cult leader. And we're waiting for him to fire up his PC. All the new content coming out. You like the new content. I know you do. All right. But yeah, as soon as we have Andrew, we'll wrap up TSSI. I think he wants to discuss he wants to provide people with the cautionary tale. But any updates on security stocks like CyberArk, Palo Alto? Well, we got him right here. Oh. What is this? Payday Lender Pimp.
How's it going?
Pretty good. How much money do I owe you?
$500 due to me. For what? Let's be clear. TSSI?
No, for just like the loan that I borrowed from you or took out from you.
Oh, $500. Did I tell you okay, we can get to TSSI. Did I tell you the story about how I accidentally got my brother to be like a Dave customer?
No.
Okay. And then we'll get to TSSI. I'll change my name to Andrew Dave Fanboy. So I wanted to test the product, right? So I wanted to see how the API, how quickly it pulls, how it differentiates or whatever. So I signed up to see how much I qualified for. And Dave, I think, was just like, okay, well, we'll give you $500 because I don't think you need our money, but if you want to take it, we'll take $15 from you. And so my brother, who's a college student, I just was talking to him and was telling about Dave, and I was like, go ahead and sign up. He's going, oh, it's got 5 stars on the App Store. It's probably pretty good. And I was like, oh, okay. And then he's like, oh, qualify for $150. I'm like, oh, okay. Is that good? He's like, I got $91 in my bank account right now. And I was like, oh no. And he goes, I think I'm going to use it. And I was like, do not use it. Do not get into this. Do not use it. And so just so everyone understands, I'm from a very large family. This brother is 12 years younger than me. So when I was in college, when I moved away from my home, he was like 6 or 7. So like, we still talk and stuff. But I don't know him that well. So then I talked to my other brother, who I'm really close with. He's 2 years younger than me, but he still lives in where I'm from, Michigan. I don't care. And I said, yeah. And I told him what happened. And he goes, oh no. So you told Tim that? You showed him? He goes, he's going to use 100%. It's like, are you sure? And he's like, yeah, he's going to be like, because he's like the kind of guy who's always trying to borrow money from me. It's like, oh, you can go borrow from Dave then. But like, I hope he doesn't, because like you don't want to use that. But anyways, let's talk about TSSI.
Wait, we're going to come back to the story because that's hilarious.
Yeah. So.
Oh no.
Yeah. So he already told me, he's like, he's going to borrow money to get some cigarettes and some alcohol on the weekend. I was like, oh, okay.
Oh no.
And I said, he better not get in the debt, spiral.
Oh, what have you done?
I messed up. I really did. I just was like, oh yeah, like I didn't think anyone, I guess it's one of those things, I would never do it. so I didn't think anyone else would do it. One of those things. But of course, people do. I just didn't think my brothers would. So this company.
Yeah, this company.
This is the crackhead of crackhead multiples right now. Are we in agreement?
I have a little bit left. Don't say that.
Okay.
Retail
is pumping it. AI, it's good. CapEx,
it's
AI,
good.
pump it up.
Buy.
No, so I'll go into why I sold, which, by the way, it's funny because I sold yesterday. I think my average sell was somewhere around, I don't know, 27, 28, something. It doesn't really matter. You remember, I bought a crap load of $10 calls and $17.50 calls too. So that and the commons. And then I also bought the 25 calls later on. So like I've made a lot of money off this, but it's really funny because like everyone, like people on Twitter were like, yeah, man. Or one guy, he just put a comment because I said I sold yesterday and it was up like 15% today. I said, tough. It's like, yeah, so tough. So tough 5xing or 4xing on a company in like 3 months. But I can get into why I sold, which just so you know, when I was looking at this company, my initial estimate was within 2 years, it could become $1 billion company. And at the time, it was 150 million market cap. Okay. It's now an $800 million market cap in like 6 months, something like that. And so because I got it. I think we were talking about $4 or $5 originally, but like, yeah, I think, yeah, but when I did the write up, at least at $7, I think it was like 150 or $200 million company.
Yeah, way smaller.
Yeah. So here's the issue with where it's priced at today. Is you have a company now who has a cap on how much they can make. They can only make, if you look at their recent earnings have gone up a little bit because procurement revenues have gone up. So they operate in 3 segments, as we know. CM members know this. They have the facilities management, which is de minimis. They have the system integration, which is the part that we like. That's the setting up the racks. And then the procurement, which is low margin, just buying products for data centers. In the last 3 months or 2 or 3 quarters, system integration revenue hasn't gone up because they've been capped at the current warehouse. So it was capped there at 7.5 million a quarter. The procurement revenues really carried them last quarter, which is great to see. It was way more than I expected on procurement revenues, being at 90 million. But procurement is lumpy, and you don't know how much it's going to be. And the current people buying it are saying new facility. They're saying AI data centers, and I don't think they have any nuance to understand that this new warehouse only went into production in this month. So I feel like they're going to come out with Q2 earnings, and most retail is going to be disappointed because I don't feel like it's going to be that high. Now I could be wrong, and if I'm wrong, that's fine. But basically, the issue with this company is you're capped on how much they can make. Basically, they would have to get a new warehouse and take the time to set that up. That would take another 9 months to a year. And so it's not that I'm bearish, I'm not short, anything like that, but I look at this because people have to remember.
Everyone ignore him. By the way, everything he's saying, ignore him and keep buying the stock, but continue.
Well, you have to view this as I'm buying this or holding this in place of something else. And there are a lot of companies, but currently, like I wish I could have more of. And when I compare it to this one, I mean, I don't think anyone in capital mindset is saying, man, TSSI is a steal at 31.10.
No, we're literally thinking like, how much can the regarded people push it up further?
Really, everyone's just like, man, how much can retail pump this? Now, here's the thing about this company, though. If you want to look at it like a trading level,
yeah,
the volume that is trading on this stock is insane. And so while that volume is going, you might just have it run.
Well, that's the mode I'm in right now. It's like how high can it go with that, last tranche, and then I'll let it go. I think even like if you sell covered calls on this thing, dude, it's crazy because like I think you can sell the 40 strike for like a 50% yield on my cost basis. It's insane.
Isn't that nuts?
Yeah. But it maybe if this is like closer to the top, it's obviously better to just sell the shares. But it's crazy to think like I can sell like a $40 strike contract to someone for like September and get like 50% of my basis back. I think it's over 50% actually, because my base is like seven something.
Yeah,
So
I
you
don't
get $4.
That's insane.
Mhm.
Yeah, so it's like 60%. So
Yeah.
you know, the biggest thing I think for most people that are, I think at this point, it's most people are looking at this, and the reason they're currently holding is taxes.
That was
But
me. That's correct.
honestly, for me, it's like I'll take the tax hit and try to harvest some losses elsewhere. I have a very good problem in that I have like no losses to harvest at the moment. So can't complain about that. But I just don't know how it's hard for me to fundamentally justify it. And I'll say this, I am terrible. I know myself. I'm terrible at the greater fool theory investing where I'm like, I know it's overvalued, but hey, if I buy it, I think like this thing's just going up. And if I buy it, I can sell it to someone else. Like once it gets to that point, I'm a little paper hand, baby. I can't do it because I rely on fundamentals to help me back up like why I'm in a stock.
Mhm.
And I'm so basically what I'm saying is I don't see a fundamental case for it here personally. It I guess I should back up and say there is the possibility that they over execute. Procurement revenues go from 90 million last quarter to 120 million this quarter. And the system integration revenues ramp super quickly up to 25 million. And then from there, you could maybe justify holding it. But like last quarter, they did 10 cents of EPS. And I was penciling out $1 of EPS for the year. That was my model. It was $1 of EPS. And that was I thought, a fairly...
It was a lofty expectation. I remember when we were discussing it in CM. That
Yeah,
was like your bull case.
Yeah, it's $1 EPS. So you have a company right now that if my model is correct, which the only upside here is if I'm wrong, which
You're never wrong.
generally, if you're investing in a company, you don't want the only reason for it to fundamentally make sense is that your model is too conservative.
Yeah.
But the thing is, if that's right, you're paying a 31 multiple on current full year earnings for a company with maybe the worst quality of earnings I've ever seen in a company. Like, I love TSSI, but if you do a quality of earnings like analysis on this, it's all from one customer, and they have no insight into their pipeline.
But don't listen to him.
Yeah. So I mean, dude. No one cares what I say.
Okay.
So no one in CM cares what I say. But I do want to get this out there, especially for the CM members, because
No, I think they're kissing the ground you walk right now. Right now, they're kissing the ground you walk.
I mean, and it's crazy. By the way, I made this a very large position. It grew to over 20% at one point. I had to cut it back to like 5%. Then it grew to 7% again, or 8%, and then I cut it again, including options. And like, no regrets. Like, this is how you want any company you buy to play out. Yes, undervalued till 40. But I mean, that's only 30% up from here. You're like insane bull case is 30%. Is my math right on that?
Yeah.
Yeah. So
I'm 33. Well, no, it's 31.
30.
So yeah.
And I think just about obviously I know he's joking. Dex is a CM member, and obviously he's joking on that. But if you were like saying realistically, that's your price target. Okay, 30% upside on a hugely volatile stock you have no insight into the Q2 earnings. I got some companies that are better than that.
Yeah, it's a beauty contest. Like all jokes aside, all
Mhm.
jokes aside, it's a beauty contest. Although I would really appreciate if the broader retail crowd, if you're listening, by all means, keep going, because I still have another batch I need to get off. But
I put a tweet, and there's Howell is not a CM member, but he interacts with us a lot on our public content, and I like him a lot. I interact with him on Twitter, and I put out a post saying like, I see TSSI getting to $20 by end of year, and this is when it was like maybe 13, 14 bucks, and that's when it started its parabolic run.
Mhm.
And it was funny because he commented and he said, and then like the next day it went to 16 bucks. And he commented, he said, "Oh, $20 by the end of the year, the end of the week." And I was like, ha ha ha, like whatever. It had a 1 day up move. It got to $20 by the end of the week. Like, so, and yeah. And so I think Howell, and I think Fabio's the same way. I don't mind interacting, and oh my gosh, I just realized, look at the related companies here.
Yeah, I know. I
Oof.
was gonna bring this up afterwards. Look at this.
Oh my gosh.
You know
Yeah.
what we should do? We need to post in Korean. So I'm gonna start posting in Korean again, and I'm gonna type in Korean something about TSSI and try to tag like the Koreans and be like, "Hey, TSSI," and then I'll unload the last of the bag.
I just want to remind people of two things though, because I did pitch this company and it went well. Well, actually, a few things. One is I was the original person who brought it up, but there was a couple CM members, Jesse, who's an analyst here as well. He's been on public streams a couple times, and Stibulo, who did a lot of work too and like helped refine the thesis, and I think have a lot of members gain conviction. The other thing is, I was a meme for a while in CM that anything I bought went down 30% right after I bought it. So, so please do not expect any pitch I have to go like this, because I will guarantee you it will not.
I defended you back then because that was a meme, but it wasn't true. It was like a few things that in the net, like your returns were still
okay,
ridiculous.
Okay. Guys, don't listen to him. Listen to me, and don't ape into the next thing I pitch.
Oh, because you used up all your luck in like this one.
Yeah.
So the next thing is gonna crash and burn. That's the rules.
Mm-hmm. Mm-hmm.
So I'm gonna avoid the next. No, I'm kidding. I mean, I think you've picked out some bangers recently.
Well, the next one I aped into is already, it's already up 40%. It wasn't my original pitch though, but you know what I'm talking about?
Yeah. Sorry,
Yeah.
I had to take care of some business right there.
I didn't see what happened.
Fuhat, do that again. I time you out. In a friendly way.
Okay.
Yeah, I'm not like actually mad at you.
Okay, so let's talk about the related companies here, because if I think about TSSI, the first company that should come up related to this is what?
Probably Dell. Yeah.
Then you can make a case like maybe smaller cap companies. You could do maybe Applied Digital. You could do IREN. You could do other companies like Celestica, things like that.
Celestica. Yeah.
So with that in mind, what are the related companies here?
All retail shit.
Okay, let's see.
Except for Sezzle, but I don't think Sezzle's retail shit. But Rigetti, D-Wave Quantum.
I don't know what Innodata is.
Quantum computing.
Red Cat.
Oh, and someone asked, what were they a month ago? Actually, in CM we have the live stream where we pitched it, and you can see I believe it was funnily enough other CM pitches.
Was it?
Yeah, don't you remember? It was Dave and TSSI were both in the recommended.
Wow. That's actually like a flex. Like, dude, look at us finding this. We found it so early. And the other one that was being talked about was the other company that's just ripped since then too.
Yeah.
It's
Yep.
hilarious. I don't remember that.
Yeah, it's you can go back in the live streams, you can see it. That's what we made a whole point to, we talked about it for like 5 minutes. Like, wow, look at this. It's like Dave and TSSI. They're not related at all. But Google had them as related stocks. So and just so like we already made a public video about it, so it's not like only private. There's a public video now with the Dave pitch. Andrew goes over it. You know, shameless plug to go just watch the video if you're curious and you want to know the Dave pitch. I think it's ran again today. It was up like 7% today, 8% today. Dave, yeah, dude. Dave had like an 8% day just today.
I have been so busy today. We're doing a bunch of stuff at my job, and sometimes my job can be demanding. And so I like, well, you know, because like I would pop into the voice channel today for that. I was like, I got 3 minutes. What's up? Like pop back out. But yeah, it did well.
Yeah.
Oh, that's good, because one of my family members jokingly said, because I manage money for all my family members, and it's been a very good entire time that I've been managing money for them. Not trying to flex, just being honest, but one of them's about to hit a big milestone, like a round number milestone. They're like, you're not allowed to come to the family reunion until you reach this milestone in my account.
Wow, so, that's some pressure.
Now we hit it today.
Oh, okay. So now you can go to the family reunion.
Go see them.
I mean, I'll see like what tomorrow my year-to-date return is for the personal holdings.
Mm-hmm.
I mean, I'm fairly certain it's cracking now like 127.
Oh, and your personal holdings?
Yeah.
Your DGen holdings?
It's not DGen.
You're up 127% year to date. It's something.
It's a little help from the retail retards, but
man, you said the R word out loud. You said retail.
Hey, we're gonna get in trouble again. There's gonna be that guy commenting. He's like, "You guys are so condescending."
I don't think I'm saying anything. We're saying anything condescending. Like
I'm just saying we're gonna
go back to TSSI. And think about the fact there's been no news since that parabolic run has started.
Yeah, I don't really know. No, but I'm joking around a lot, and you guys have to excuse me if I'm being all jokester and stuff. It's because I'm excited. No. It's okay to be excited. It's a very euphoric experience.
To finally have one of your companies get the indiscriminate buyer bid.
To get before, right? So like before anyone, that's it feels good. It feels fun. Of course.
I am bearing the lead, and I am sorry. If you want this, you have to be in CM, because I'm still building out my position. I think Fabio is. One of the companies that we're in could easily, I can easily see that happening to it as well.
I think I know which one you're talking about, actually.
Small market cap, small float. So think of a small market cap with a high dollar amount. Yeah. And it's in the right theme. That's not anything to do with my investment thesis, by the way.
It's not. The idea is not that the retards come. It's just there. I said it again.
You didn't say retail.
But which we'll talk about in a second when we get to ICOM. All right, so we won't talk too much about Dave because there's a public video. Just go watch that. Shameless plug to go watch the video. Mm-hmm. Again, it's public, it's free, and you can get the thesis right there. Now, for full disclosure, Andrew, since when have you owned Dave?
I think my first buy was at 70.
I'm not saying that to like as a bragging point to the audience, but it's to say like you still think this has legs today. That's why we posted the video. It's not like we're,
I bought
Hey.
more today.
Exactly. So if you guys are curious, go check out the video. All right. So I think we're on the last topic. I got to change the timestamps now. But yeah, the last topic is locking in income at current yield. So it's more like a fixed income topic. Let me go ahead and change the timestamp because I'm going to forget if I don't do it right this moment. So I'll just put 1:20, an hour and 20. Originally I had it set at 50 minutes. All right, cool. Save. There you go. So anyone watching this afterwards gets the proper timestamp. So this discussion is going to be more so like about where we are in the current rate environment and what it's a little bit of a segue into the new kind of content I'm also going to be making. This is something that bores most people, but like I said, I hope to have Strongman Personal Finance on. We're going to try to make some content on this. He's going to bring the tax perspective. So we're going to be discussing things from a tax point of view. But, long story short, we're going to segue this into broader investing. And of course, that's discussing rates. Andrew, how do you feel about, rates going in the future? Do you think they're going to go up or down? Simple question to start off.
Most likely down.
Most likely down. I agree with you. So that brings up the point of, as an investor, some of you might be retirees. Again, that's like what sparked this whole, like, I guess, segue into new kinds of content, the requests I got. And, if you're looking for locking in yield right now, the argument is you should be focusing on trying to find fixed non-variable income. The time for variable income is, for example, if we get to a lower rate environment, and then you get the risk that, you have a rising rate environment in the future. And so variable rate entities or variable rate instruments are going to protect you from that. But now, since we're probably encroaching on a environment that rates may come down, then you want to focus on locking in those higher yields today. And so, long story short, if you're a retiree and you're investing for income, what you want to do is probably look for those opportunities, make selections, and invest accordingly, and lock in yields that you can easily get. I think right now, responsible yield, 7 to 10% today, going a little bit higher than the risk-free rate, right? And to still investment grade debt, that's what you can lock in. You can find prefs yielding good rates, but not so much maybe in like a year or two from now. That may in fact come down. Spreads are, you have a risk of spreads widening. So just keep that in mind, but the spreads might be where they are because they're also, I think spreads are pretty tight right now, last I checked, or I might be misremembering, but I'm pretty sure that spreads have actually tightened up a bit. But the prefs
Like
indicate, credit spreads.
I'm not sure.
I think they're fairly tight. I can check super quick.
It's Fred has that, right?
Yes.
Looks like they're coming down. High yield index option adjusted spread.
So they're tightening. So you do carry that risk.
They're still elevated from February. It was 2.6 in February, and it went up to as high as 4.5 in April, and it's back down to 3.04.
So you can see why also, Andrew, I got a little excited to sort of start the income fund, so to speak. Because you can benefit from the tightening, but if we tighten further, and the tightening is basically implying that the credit markets are not concerned. There's less of a concern about the broader economy, et cetera. And then you can take that as a bullish indicator for stocks, by the way. So I know we talked a little bit about today, clown market this, clown market that. There's actually still a lot to be bullish. And keep in mind, clown market can dissipate, but the broader market can still rally. So both can happen. You can have crap stocks sell off and quality lead, and that's actually a very healthy state of the market. So
I mean, the quantum stocks are down today.
there you go. So like
DOA was down. Well, INQ was up, but other than that, all of them were down.
INQ had like a
flat.
7% up day, right?
Yeah, but it was also down 7% yesterday.
Oh, okay. Random noise. The Koreans are moving.
Yeah.
Between stocks. So
did you explain that? People don't just think you hate Koreans. They're not the retail.
Oh, yes. Yes. Well, I mean, like, dude, you know how many Koreans we have in Capital Mindset? Especially vocal ones, the ones that talk. Yeah. We have quite a few. But yeah, so where it comes from is I think it was a paper that came out showing that Koreans in South Korea, there's I think it's because gambling is illegal, correct?
Mm-hmm.
So what they do to satisfy the urge to gamble is they invest in stocks, very highly speculative stocks. And a paper came out showcasing that when Koreans mass migrate as investor base to a particular stock, that tends to be right before the death of that stock. And they just like move in like this massive group sloshing around to different themes, so to speak.
Mm-hmm.
And they picked up the quantum theme. So they're in that. Maybe they pick up TSSI.
I doubt it.
That's because you haven't tried tweeting in Korean.
Oh, there
and
we
explaining go. That if you say SMCI, what's the market cap of SMCI? Come on, let's be creative here. So SMCI market cap is 29 billion.
Yeah.
Why not TSSI? Why can't TSSI be at 30 billion market cap? Andrew, give me a compelling argument that. Come on.
Super Micro's just such higher quality.
Give me another reason.
Why TSSI can't?
Yeah, why can't
No,
it?
Super Micro's not higher quality, I don't think, on their installs. There's this issue with their warehouses, but I feel like, they could just get another warehouse. So why can't they get 30 billion?
Oh, there you go. Okay, because I was about to insert meme or scene from American Psycho. Why not, you stupid bastard? If you gave me another reason, why not? So, but okay, we're on the same page. 30 billion Koreans. 30 billion TSSI. Come on. Even all the amount that I sold off, the amount that I still have, if it got to 30 billion, that would be an insane return. That would.
That's like a 40x return from here.
Yeah. Hey, you got to use your imagination here.
So if that happened, you would do very well.
Yeah.
You would do. I mean, yeah. If you have a stock go from 200 million to 40 or 30 billion, you'd do pretty well.
Yeah. All right. With that being said, I think we can close off here. 1 hour and 30 minutes, and then we can start ICOM. So, all right. Thank you guys so much for joining us here today on Capital Mindset. I'll try to make another video for tomorrow to release for you guys. And if you want to or are curious about joining the Capital Mindset community, you can check out the description below for that. Otherwise, I'll be seeing you guys on the next one. I'll leave you guys with the classical.
Okay. We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.